Good morning, Jamil. Could you comment on the Malaysia first quarter GDP numbers?
Good morning, and thank you very much for having me. Okay, so basically on headline, economic growth on an annualized rate slowed to about a 6-7 year low. But what I would like to point out is that it was still higher than estimates, which would mostly range between 4 and 4.1%. And when you bear in mind how many global external risks are out there in the atmosphere right now, such as continually depressed commodity prices, repeated concerns about slowing global growth, which might hurt export demand, there is no real reason to be distractedly concerned right now by the headline that growth slowed to a 6-year low.
All right. Well, even though the number is at a 6-year low, as rightly pointed out, 2.1% is great. Which sectors do you think is contributing to this growth?
Okay, so basically what we do look at a lot is the export figures, because one thing that we were looking at very closely early last year is whether the continual weakness when it comes to Malaysian currency would actually have have a relationship on export competitiveness. Over the first half of the year and as we enter Q3, we were seeing some very stronger export figures. But when you look at this GDP report, you can see that exports did slow down a little bit towards the end of last year, and this continued into the new part of this year. And what this does suggest that these weakness when it comes to global economic concerns, whether this is due to weaker growth in China or generally due to global weaker forecast, it's starting to have a weaker impact when it comes to demand for Malaysian exports, and this is what investors and the markets really need to look out for moving forward.
It seems that the currency has taken a hit. I'm talking about the ringgit has taken a hit. Do you think this will likely affect export numbers?
Okay, so a weaker currency can help export competitiveness, but we found this relationship early last year, and it's not something that I think would continue into this year, mainly because of global concerns when it comes to economic growth. Now, look, guys, what you really need to look out for now is that there was some demand for the dollar late last week and early last week, and this contributed to weakness against all currencies related to the dollar. The ringgit moving back just over 4 against the dollar. I would not say this was related to the GDP report. It just came, in fact, to general dollar strength.
Right. And there's also some expectations that Bank Negara policymakers intend to cut interest rates. How do you think this will play into this site right now?
Okay, I have to be honest with you. I would think it would be a little bit of a harsh reaction right now to cut interest rates. Reason being is that there's still some inflation risk for the economy. And also, if these expectations are accurate that growth could and might pick up over the second half of the year, this would provide no basis to cut interest rates. Additionally, if there was a cut in interest rates, this might weaken the currency, which would lead to these inflation risks returning to the Malaysian economy just as they began to subside a little bit. And then when it comes to it, lower interest rates could then cause, even further expensive cost of living.
Do you think that consumer demand will pick up currently?
Consumer demand will pick up. I think it's possible. The currency has rebounded significantly when you compare it to the 440 levels that it was trading against the dollar in around Q3 last year. What you really need is some stability when it comes to the currency. This would improve some consumer sentiment, and it can help drive consumer expenditure. I think one of the reasons why there are underlying emergence of expectations that Bank Negara could now look to cut interest rates is to improve domestic demand. Right now, personally, I would say that this would be quite a harsh reaction. It's more realistic to expect a stable outlook.
Thanks, Jameel. That was Jameel Ahmad, Chief Market Analyst for FXTM.